real estate versus stock market. Which is better investment for you? When it comes to building wealth, two of the most important investment avenues are real estate and the stock market. Both offer opportunity for substantial return. What they differ greatly in terms of risk, liquidity, and investment strategies. Deciding which one is better for you depends on your financial goal, risk tolerance, and time horizon. In this article, we will compare real estate and the stock market, outlining their pros and cons to help you make an informed decision. The firstly we will discuss here initial investment requirement. One of the primary difference between investing in real estate and the stock market is the initial amount of capital required. Real estate, buying a property usually required a large upfront investment. Even with a mortgage, you will need a significant down payment, typically 20% of the property value, along with closing costs, property taxes, and maintenance expenses. Real estate investments also often required ongoing expenses such as repair, insurance, and property management. Stock market. Stock market stocks are much more accessible to individual investors, allowing you to start with an little or as much capital as you like. Thanks to platforms like brokerage apps, you can begin investing with a small amount of money and gradually increase the portfolio, which is better for you. If you have substantial capital and are ready for a long term investment, real estate might be the right choice. If you are starting with limited funds, the stock market offers a low barrier to entry and greater flexibilities. The second point here we discuss is liquidity. Liquidity refers to how easily you can convert an asset into cash. This is a key difference between real estate and the stock market. Real estate Real estate is a relatively liquid asset. Selling a property can take time, weeks, months, or even longer depending on the market. Even if you need cash quickly, real estate transactions are complex and may involve paying agent commission fees and taxes and etc. Stock market Stock market are highly liquid. They can be bought and sold quickly, often within minutes or hours, depending on market conditions. The liquidity allows you to access your investment funds whenever needed, making the stock market more flexible, which is better for you. If you need easy access to your money, the stock market is more flexible. Real estate is better suited for investors who can afford to have their capital tied up for a longer period. Third point here is risk and volatility. All investment come with risk, but the type of risk vary between real estate and stock market. Number first, real estate. Real estate is generally considered a stable long-term investment. While property values fluctuate, they trend to rise over time, making real estate less volatile than the stock market. However, real estate is not without risk. Market crashes, property damage, or rental vacancies can impact your return. Where stock market are known for their volatility. Prices can rise or fall rapidly in response to economic news, market sentiment, or company performance. While this can lead to quick gains, it can also result in significant losses if the market takes a downturn over a long term. However, the stock market has historically provided strong returns which is better for you. If you are comfortable with higher risk and short-term volatility, the stock market may suit you. If you prefer a more stable, long-term investment, real estate could be a better option. The fourth point here is control over the investment. How much control do you want over your investment? This varies significantly between real estate and the stock market. Real estate. As a real estate investor, you have direct control over your property. You can decide what improvement to make, who to rent to, and how to manage the property. This level of control appeals to hands-on investors who like to actively involve in managing their assets. Where in stock market, its contrast, investing in the stock market offer little direct control. You can choose which stock or fund to invest in. But after that, the performance of your investment depend on market forces and company management. This passive nature may appeal to investors who prefer a set it and forget it approach, which is better for you. If you like to be hands-on and enjoy managing tangible asset, real estate may be the right choice. If you prefer passive investment, the stock market is better for it. The fifth point here is potential for growth and returns. This is very important point. The potential for return is a critical factor when comparing investments. In the case of real estate offer multiple streams of income, including rental income and property appreciations over time. Your property can increase in value, providing significant return when you sell. However, real estate tends to appreciate slowly, and a return can be affected by market conditions, property upkeep, and tenant reliability. Where in the stock market, historically, the stock market has offered higher return than real estate. Over the long term, stock market have averaged annual return of 7 to 10%. This is particularly true if you invest in growth stock or index fund. The downside is that stock market gains are not guaranteed and short-term volatility can wipe out return if you need to sell during a downturn, which is better for you. For long-term growth potential, the stock market may offer higher returns. Real estate, while slower to appreciate, provide more stable and reliable income streams through rent and may appeal to financial focused investor. The sixth and the final point we discuss here is the time commitment and management. Consider the amount of time and effort you are willing to put into managing your investment. In the case of real estate, owning and managing real estate can be time intensive. You may need to handle tenant issues, property maintenance and repairs, or hire a property management company, which reduces your return. Real estate is generally considered an active investment that requires ongoing involvement. Where in case of stock market investing is much less time consuming. You can manage a stock portfolio with minimum effort, especially if you invest in index fund or use automated investment tools. This makes the stock market ideal for those with limited time to dedicate to managing their investment, which is better for you. If you are looking for a hands-off investment, the stock market is more suitable. Real estate may be the better option if you are willing to spend time actively managing your investment. The last final conclusion, which investment is right for you, the decision between investing in real estate or the stock market depend on your financial goals, risk tolerance, time horizon, and investment style. Here's a quick summary. In the case of real estate, best for investors seeking long-term stability, passive income for rent, and a tangible asset they can manage. Ideal for those with significant upfront capital and a willingness to handle property management. Where in the stock market cases, best for investor seeking liquidity, higher potential return, and a more hands-off approach. Ideal for those with smaller amount of capital who are comfortable with market volatility. In many cases, the answer may not be either or, but a combination of both. Diversify your portfolio with both real estate and stock market investment can help you balance risk and return, providing both short term liquidity and long term growth. Thank you.